Hey everybody, welcome back and thank you all for taking the time to support the channel and join me with this GameStop daily review. It is Monday, warrant placeholders should be in your account and trading should go live tomorrow. We'll have to see how that affects everything. Not looking so good today though. We're down 1.3% on the day and another near percent after hours, which has just started as well. But you know, we can't go downwards forever, and we are starting to get close to some major support. So, we're going to take a look at all of that today. A lot of bearish indicators setting up. However, things have to cool off before they can go again. And by staying informed, aware, we will know exactly when that's going to happen, and just kind of increase our knowledge base as we go. So, starting out with the Roaring Kittinger charts, we've lost our first simple moving average here, our 20, and then we are finding potential support, which we may have just lost after hours here, but we'll see how this opens up tomorrow, right? Losing that 50, sorry, not that 50, the 100, and the 50 is down here in the red. So it's going to catch up. Maybe that is our support, and if that breaks, which will align with the lower band of the bond gap. Of course, we also have that secondary gap formed from the earnings/warrant announcement gap up, which I find to be unlikely that we'd ever retest that. We smashed earnings. Why would we ever go back to that zone again? But, here we are pretty close. So, just watching out for that if the lower band breaks. And even if it does, it's not that far. Maybe, the whole world blows up and, we're back to bottom trend line. Could be. I've traded GameStop long enough to know that anything's on the table here, right? Of course, it is October. Bears beware. RSI is broken down here on an upwards trend, which is unfortunate as well. And, now maybe we can start to, pinch ourselves in on a downward trend and see if we can break that into the future. Volume is not great. We'll take a look at that on my charts as I've got that volume indicator. But I guess, what is it here? 11.45, which is not terrible. I mean, it's been worse, but obviously it's not 20, it's not 50 million. Our MACD, our momentum is negative again, which is unfortunate. We continue to diverge, right? So that's a bummer, and hopefully, we'll swing that around, do some converging, get from that negative area to that positive, and all these things kind of showing the same thing, right? So we have our PMO crossing under our signal line, and then if that happens, we're headed towards our well, this is a PMO as well, but it has a moving average on it. So we're headed back towards that, which would be unfortunate. However, we could get a little bit of whipsaw here, right? And we're gonna look at our 4-hour for that. Just kind of zooming in a little bit. We don't have to wait for the 1 day, and this is was the red flag the other day, because we broke negative on the 4-hour, and we're like, well, maybe it's a whipsaw and it breaks back positive again. We need to wait and look for the 4-hour to do that. We had the PMO get it back above this signal line, which was great, but we rejected the moving average PMO, slicing downwards after that, which is unfortunate. However, this is going to swing back before the 1 day swings back, right? So eyes on, we're going to be waiting for that, and at which point, hopefully it can hold, and we get another one of these going on. But we are definitely waiting for a momentum reset, which could be further retracement, and then potentially a period of extended consolidation. It doesn't mean it's going to rebound immediately. We've seen how long GameStop can consolidate on its lower trend line before making that move. Unfortunate, unlikely, as the market seems to be heating up quite a bit as well, but still very much a possibility, okay? What else do we have from here? MACD's negative, RSI's downtrending. Yeah, that's all I really have on the Roaring Kittinger charts. Let's get into my personal charts here. Pull up GameStop. And we'll do what, a 15-minute here. And we'll do a 1 hour on the bottom. Okay. It's so messy. I know. You just should see my kitchen. So we do have a break of structure here into that afternoon sell-off, right, where we blow out this morning's low. That's going to set up a bearish order block, which is unfortunate, but it is what it is, and that's giving us the momentum to break through this 4-hour bullish order block, which is now kind of being converted, I believe, into a bearish breaker block, which is the last thing we want to see, but it is what it is. I call it how I see it, and this is the current situation, right? So things not looking good on that 15-minute chart. And then we go to the 1-hour chart here. We see similar story where we have this break of structure from yesterday's low blowing out this afternoon. And that's going to set up a negative order block on yesterday's sell-off, just like we had on today's sell-off, just on a higher time frame, right? It's the same pattern that we're always looking for here. And with that, we've both invalidated the 4-hour bullish order block and invalidated our sell-side liquidity, which is not great. It is what it is. These are bad things to have happen, but let's get them out of the way. Let's reset momentum, and then we can continue on, that bullish trajectory, which I do expect into the future. However, we will have to wait. We can't force these things. So that's not great. And then we can jump up to the 4-hour, and it goes from bad to worse, where we have this 4-hour order block invalidate here, reactivate into a bearish breaker block, and down we go. Good news on that, maybe finding support on the 200. This is an exponential moving average on the 4-hour or 200. That could be, by all means. And of course, we have the lower band of the gap here as well as that secondary gap from the earnings. And then on our 1-day, market structure shift on the larger time frame, which isn't great, signaling continued downtrend, right? We have the golden cross set. However, we talked about that in the last video, how the exponential moves faster than the simple moving averages, and you could potentially get a whipsaw, and it's not a confirmed golden cross in the classical sense because it uses simple averages. However, I like to get in early and then just manage my risk. So if this can stay, good news. If not, maybe support at that old bullish breaker block, which we've now have a bearish breaker block here, right? So just like we got this extended run off of it, we could get an extended downtrend off of the opposite side of that, which is, it is what it is, right? Just calling it how I see it, even though I don't like it. I'm sure this doesn't fit many of your biases, so I apologize for that, but it is the reality. Of course, all of these indicators are lagging, right? They, follow price action, which precedes it all, and, that could hit in an instant. And, we've seen that so many times where, there's no trend and it just gaps up, right? So all of this is subject to change in a literal heartbeat. So just, I guess take some hopium with the terrible news I have for you today. We've blown out all of our volume imbalances on the 1 day, which we were kind of holding as support here on this top line, just slicing right through them. And, this is a massive inefficiency in liquidity. This entire area has nothing in it. So you could almost treat it like a gap as well, just because, probably a lot of orders here that weren't interacted with, and the market maker is, going to want to get the price in there, interact with all those orders, and, be an effective participant, which is, their whole spiel. So, 1 day not looking great. We could just hold this 200 as support. The 50 here is support. The breaker blocks here is support. The 1 day gap is here support. The lower band of the other gap is also here support. If all of that breaks, we can re-challenge our primary order block that started all of this. We could challenge our trend line, which also was a big play in the beginning of this run. So Again, it just goes to show you the power of some of these moves. The options chain has been obliterated. We see the shares flowing back as people are sending those shares out again, and that fee did not go up at all. Again, this could change from what I can tell. Everyone with exposure probably would have hedged ahead of time, which was this big run that we got, and then at which point they get their warrants here, and it just sells off, right? So again, subject to change. We're gonna have to wait. I'm gonna give it a week or two. Maybe that momentum resets faster than we think it does, and we can go forward. We had the warrants release. I should have started with this Project Genesis, and so I was expecting within this an early expiry clause based on price trading at a premium to the strike of the warrants. We didn't see that. What we did see was that they are non-fungible, right, from GameStop, which was nice language there. Anyone with early delivery, don't worry about it. Those are just placeholders. That's nothing new there. They should have showed up now, and they'll trade tomorrow. There was something else too. Oh, okay, so they can only be exercised while the S3 is active, and that's the form we just had the other day that sent us downwards. That shelf offering, right? And GameStop can pause this S3, at which point your warrants will not be exercised or not exercisable, and they're going to add any theta that you lose to that warrant. They can also reduce the strike price, from what I can tell. Giving them more flexibility on them. Maybe we get beat down, and no one's going to exercise them because we're not going to ever hit 32. And maybe they drop that price to somewhere where it is worthwhile to do again. That could be. And it was just like a standard boilerplate from what I can tell. If you had any anomalies that you've seen within that, feel free to let us know in the comments. Mostly I was just looking for early expiration clause. Didn't see that. So yeah, it was quite the document. Just gave it a quick once over. I'm sure as the week continues, we'll have more time to digest everything there as well. So yeah, I just IV's down as well, right? And it's already so low. So like I know a lot of people are selling covered calls here. Write it down. That's great. Good job. Well played. I mean, you still got it, right? Good job. I would maybe be starting to call some of those back, potentially, because they've got to be almost 80, 90% green, right? And then, lock those profits up. For me, I didn't sell any covered calls on this run. IV was so low, and with the corporate catalyst, I just didn't find it worth it. Also, how price filled the gap during the X delivery date. It was just the timing of this run was not great. But again, it comes back to the mechanics of the run, which was pre-hedging for the X delivery date to receive those warrants, and now that hedge is being dropped, and we're gonna have to restart this whole process again. So yeah, just waiting for that momentum to reset. I'm gonna be on it every day. Could get boring the next couple days. I don't know, but that's okay. We're gonna try to maybe go into some of our indicators for you a little bit more in depth, teach you how to do it, and then you'll be able to do this without me, right? Which would be great. So until then, though, leave a like, drop a comment, subscribe to the channel, and we'll see you all tomorrow. Have a good one.